as we've been saying for some time, we believe that inflation is going to turn into deflation. In other words, prices will not be rising on a year-over-year basis. They're high and they are still rising. The consumer's on strike. Monetary policy, we believe, is still restrictive, and we think prices are going to crack.
Wait a minute, everyone. We all agree that the crypto market never sleeps, but with countless newsletters out there, how do you choose the best one for you? Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In today's video, Cathie Wood discusses fiscal policy, monetary policy, market signals, economic indicators, and innovation. So without wasting any time, let's dive into the video.
Now, on a year-over-year basis, it is down to 7%. But if you look at the growth on a quarter-to-quarter basis and then annualize it, we're at half that growth rate. In fact, less than half of that growth rate. So that tells you what's coming here. The rate of velocity growth is slowing down and is no longer a buffer if money supply growth is negative or weak. And it is very weak now. In fact, if we took the rate of money growth at 0.6% on a year-over-year basis, and if that 7% in velocity growth drops to roughly 3.5%, which is where the quarter-to-quarter growth rate is going, then there's very little room for GDP growth. 3.5%, 3.5 to 4%, it accommodates both real growth and pricing. Is it 2 and 2 or 1 and 3? We don't know. But the history of velocity is once in motion to the downside, it keeps going, and we end up in a recession. So we have been saying for quite some time, we're in a rolling recession. Housing has been in recession. Autos are in recession-like conditions. Commercial real estate, office, and now even more multifamily, which is much broader based, in what we believe is a recession. We think consumption is entering a recession. Now, during recessions, consumption does not fall apart unless we're in an 08-09 period. But it has been slowing down fairly dramatically here, and we believe we're moving towards a flattish consumption environment, which is very weak. And we do believe that is why pricing is going to come down.
Bitcoin whales took full advantage of the Bitcoin price slump on June 11, accumulating a combined 20,600 BTC worth $1.38 billion. According to blockchain analytics firm CryptoQuant, it was the largest inflow day for Bitcoin whales since February 28, when spot Bitcoin exchange-traded funds, ETF, were barely 6 weeks old and BTC approached a new all-time high. Inflows into Bitcoin whale accounts hovered between 1,300 and 2,200 Bitcoin per day as Bitcoin fell from $71,650 on June 7 to around $69,000. The price plummeted again days later, leading to a massive day with 20,600 Bitcoin flowing into whale accumulation addresses on June 11. The data hasn't yet been updated for June 12, which saw Bitcoin's price briefly spike after better-than-expected United States Consumer Price Index results. At the time of writing, Bitcoin is trading for $67,500. It comes as Bitcoin's supply on cryptocurrency exchanges fell to 942,000, its lowest level since December 22, 2021, according to on-chain intelligence platform Sentiment. A fall in Bitcoin reserves often indicates a strengthening market, where investors anticipate upward priced action over the mid to long term. Ethereum whales have recently bought over 240,000 Ethereum worth nearly $840 million at current prices, according to industry analyst Ali Martinez, citing sentiment data. However, unlike Bitcoin, Sentiment said the supply of Ethereum on cryptocurrency exchanges has increased in recent days. There is currently 17.98 million Ethereum, worth $63.1 billion, held on cryptocurrency exchanges, according to Sentiment data.
The other thing that's come out, of course, and importantly, we've been talking about NVIDIA for a while, no question, has been the most important force in unleashing the AI age and empowering companies like OpenAI and Anthropic and Meta with its open source Llama 3 platform. So very much believe that NVIDIA has led the charge here, and all praise to NVIDIA. But what we've been saying for some time now is that if NVIDIA is going to continue to appreciate at its recent rate, which is quite extreme, of course, I think those of you who know us know that we wrote it for 100-fold move, and there's been, and we've missed a 3-fold move. That is what happens as you move into parabolic momentum moves in the market, and everybody jumps on board. But if that is right, the parabolic move here, then we better see some big gains in other companies. And we thought we would see them in the last few quarters. We really haven't. We really have not. Now, what we may be seeing, and we need a few more earnings seasons to determine this, is productivity is increasing. So right now, first order effect is productivity is increasing, better, faster, more productive, more efficient, more creative products and services coming out of generative AI. Maybe that's happening, but it's not clear cut yet. So the picks and shovels, which is how we group and many people group NVIDIA, picks and shovels has been the first mover, no question about it. But in order to sustain that move, we need to see some real gains, real benefits elsewhere. So, there are puts and takes with each of these stocks. And we think generative AI is truly disruptive. So the idea that the crowding into the Mag 6, the Magnificent Six, which are basically these stocks, to the exclusion of so many other stocks, is, we think, questionable. And by some measures, and I think I mentioned this before, we've never seen this kind of crowding in before. Not even during the Depression, when people were worried about companies going bankrupt. They crowded into just a few stocks. We went higher this time around. That's a Goldman study, and we'll present it at the next In the Know.
The United States Federal Reserve's hawkish tone has not swayed a technical analyst's prediction that Bitcoin will soon surge almost 25% above its all-time high of $73,679. The next step, before eventually reaching the cycle's peak of $123,832. $91,539 target left untouched and unchanged for Bitcoin. Pseudonymous technical analyst CryptoCon wrote in a June 12x post just hours after the release of the Fed's meeting minutes, which maintained the interest rate, with just one planned reduction in 2024. CryptoCon supported their Bitcoin prediction using the Magic Bands model, which breaks up the cycle into different levels based on previous cycle peaks and bottoms to predict future prices. The model is based on the idea that once the price of Bitcoin breaks through one primary level, the current all-time high, it moves on to the next step based on previous cycle movements. According to the model, Bitcoin is currently resisting within level 2.5. However, once it breaks through this consolidation period, it will reach level 3 at $91,539, followed then by the cycle top target of $123,832. An increase to $91,539 would represent a 34% spike from its current price of $68,315, according to CoinMarketCap data. Taking some time to reach it at level 3 of the magic bands, but it's the next step, added CryptoCon. The prediction came despite concern among other traders over the Fed's hawkish tone, which is generally used to describe when the Fed appears to be taking a more aggressive stance to control inflation, including fewer interest rate cuts. And do not forget to subscribe to Bitcoin Seller. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.